I've spent 60 years watching how government bureaucracies operate, and I can tell you with absolute certainty, when the IRS sends out a critical notice, ignoring it ranks among the most expensive mistakes you'll ever make. Here's what nobody's telling you about the latest IRS directive that's landed in millions of mailboxes across America. The agency has identified a systematic error in how Social Security benefits are being reported. And yes, this affects you directly if you're receiving those monthly payments. The mathematics are straightforward, though the implications run deep. For 2024 and 2025, the IRS has discovered discrepancies in Form SSA 1099, reporting that could trigger underpayment penalties, additional tax bills, or worse, delayed refunds that many depend upon for basic living expenses. We're talking about provisional income calculations that determine whether your Social Security remains tax-free or gets pushed into taxable territory. Now, the rational response isn't panic. It's verification. The IRS rarely makes such announcements without documented cause. What I've learned from decades of studying institutional behavior is this: the early responders always fare better than those who procrastinate. The correction window exists, but it's finite, and the bureaucratic machinery doesn't accommodate late arrivals kindly. Let me walk you through exactly what's happening here, because the devil, as always, resides in the details that most people never bother to examine. The IRS doesn't issue blanket notifications without substantial reason, and understanding their motivation tells you everything you need to know about the severity of this situation. What we're dealing with is a fundamental miscalculation in how Social Security Administration benefits interact with your overall tax liability, and the compounding effect of this error becomes more pronounced the longer it remains unaddressed. The mechanics of Social Security taxation have always been more complex than the simple narrative most people accept. You've been told that if your income stays below certain thresholds, your benefits remain untaxed. That's technically accurate, but it's also dangerously incomplete. The real calculation involves what the IRS calls combined income or provisional income, and this is where the current crisis originates. Your combined income consists of your adjusted gross income, plus any non-taxable interest you've earned, plus half of your Social Security benefits. When this number crosses specific thresholds, suddenly portions of your Social Security become taxable. For individuals, that threshold sits at $25,000. For married couples filing jointly, it's $32,000. Cross those lines, and up to 50% of your benefits become taxable. Push even higher, past $34,000 for individuals or $44,000 for couples, and 85% of your Social Security gets pulled into taxable income. Now here's where the IRS problem manifests. The Social Security Administration sends you Form SSA 1099 each January, documenting exactly how much you received in benefits during the previous year. This form should be straightforward, a simple record of payments made. But the IRS has identified systematic errors in how these forms have been generated, particularly regarding Medicare premium adjustments and repayment of benefits from prior years. When your Medicare Part B and Part D premiums get deducted directly from your Social Security check, those deductions should reduce the benefit amount reported on your 1099 form. In many cases, they haven't been properly reflected. Similarly, if you repaid any Social Security benefits from previous years, perhaps because you returned to work and exceeded earnings limits, those repayments should adjust your taxable benefit calculation. The reporting has been inconsistent at best, catastrophically wrong at worst. The implications extend far beyond a simple number on a form. If your SSA 1099 overstates your actual benefits, your provisional income calculation becomes inflated. This pushes you into higher taxation brackets for your Social Security benefits, meaning you pay taxes on money you never actually received. But the damage doesn't stop there. An inflated adjusted gross income affects your eligibility for numerous other tax benefits and credits. The Earned Income Tax Credit, the Additional Child Tax Credit, education credits, retirement savings, contribution credits, all of these phase out based on your income level. An artificially elevated income from incorrect Social Security reporting can disqualify you from benefits you legitimately deserve. I've seen cases where a $2,000 reporting error on the SSA 1099 cascaded into a $5,000 swing in total tax liability once all the downstream effects played out. What makes this particularly insidious is the timing. Most people file their taxes in February, March, or April, working from documents they received in January. By the time the IRS identifies the discrepancy and issues corrections, you've already filed your return based on erroneous information. Now you're facing amended returns, potential penalties for underpayment if the error worked in the other direction, and the bureaucratic nightmare of unwinding calculations across multiple interconnected forms. The IRS doesn't grant automatic forgiveness for errors that originated with another government agency. In their view, you bear responsibility for the accuracy of your tax return regardless of whether the source documents were correct. The notice the IRS has issued addresses this systematic failure, but understanding the notice requires more financial literacy than most Americans possess. The language speaks of reconciliation procedures and corrected reporting protocols without clearly explaining what actions you must take immediately. Let me translate the bureaucratic obfuscation into plain English. First, you need to locate every SSA 1099 form you've received for the past 3 years. The IRS has indicated that the reporting errors extend back through multiple tax years, meaning you might have filed incorrect returns not just for 2024, but also for 2023 and potentially 2022. Each of those years remains open for amendment, and if the IRS discovers the error before you correct it, the penalties multiply. Second, you need to verify the accuracy of the benefit amounts reported. This requires comparing your SSA 1099 against your actual bank deposits, or if you receive paper checks, your payment stubs. Don't assume the SSA 1099 is correct just because it comes from a government agency. The entire reason we're having this conversation is that the Social Security Administration's reporting system has failed systematically. Check every month's payment individually. Look for Medicare premium deductions and verify they were properly subtracted from the gross benefit amount shown on your 1099. If you had any months where benefits were withheld or adjusted, those need to be reflected accurately. Third, understand the difference between gross benefits and net benefits. The SSA 1099 should report net benefits, what you actually received after all deductions. But in many cases, it's been reporting gross benefits, the amount before Medicare premiums and other adjustments. This distinction matters enormously. If your gross monthly benefit is $1,800, but Medicare Part B takes $175, your net benefit is $1,625. Multiply that $175 monthly difference across 12 months, and suddenly your SSA 1099 is overstated by $2,100. That error alone could push you from the 0% Social Security taxation bracket into the 50% bracket, creating a taxable event where none should exist. The correction process itself deserves careful attention. If you discover your SSA 1099 was incorrect, you cannot simply ignore it and use the correct numbers on your tax return. The IRS receives a copy of every SSA 1099 the Social Security Administration issues. Their computers automatically match the amounts on your tax return against the amounts on the forms they received. If the numbers don't align, you get flagged for audit. The proper procedure involves contacting the Social Security Administration directly, requesting a corrected SSA 1099, and then filing your tax return using the corrected form. If you've already filed using the incorrect form, you'll need to file an amended return using Form 1040X once you receive the corrected SSA 1099. Now let's talk about the people this hurts most severely. The Americans living closest to the financial edge, those whose entire retirement income consists of Social Security plus perhaps a small pension or minimal savings. These are the ones who get devastated by reporting errors. When you're managing a fixed income of $28,000 annually and every dollar has been allocated before it arrives, an unexpected tax bill of $1,500 isn't an inconvenience. It's a crisis. These folks can't absorb that shock. They're already choosing between medications and groceries, between heating and eating. An IRS bill that arrives 9 months after they filed their taxes, demanding payment for an error they didn't make, based on a form they trusted because it came from their government. This destroys people. The penalty structure makes it worse. If your withholding or estimated tax payments don't cover at least 90% of your actual tax liability, the IRS assesses underpayment penalties. These penalties compound quarterly. If the SSA 1099 error caused you to underpay your taxes because you didn't know your actual income was higher than reported, you're now facing penalties for something completely outside your control. The IRS does have procedures for penalty abatement based on reasonable cause, but navigating those procedures requires knowledge and persistence that many elderly Americans simply don't possess. They receive the penalty notice, they pay it because the government demands it, and they never realize they could have fought it successfully. What I find particularly troubling is the coordination failure between government agencies. The Social Security Administration and the Internal Revenue Service both operate under the Treasury Department umbrella, yet they can't manage to synchronize their reporting systems adequately. The SSA knows exactly what it paid you each month, it knows exactly what Medicare premiums it deducted, it knows whether you repaid any prior year benefits. All of this information exists in their databases. Generating an accurate 1099 form should be a trivial exercise in data extraction and formatting. That they've failed at this basic administrative task across millions of recipients tells you something disturbing about the competence of federal bureaucracies managing programs upon which tens of millions of Americans depend completely. The solution the IRS proposes involves enhanced verification protocols and corrected form reissuance. But these fixes don't help the people who already filed incorrect returns based on incorrect forms. Those individuals now face the burden of identifying the error themselves, requesting corrections, and amending their returns. The IRS notification provides a website and a phone number, both of which funnel you into systems designed more for the convenience of the agency than the citizen. The website requires you to create an account with identity verification procedures that confound many older Americans. The phone system puts you on hold for hours before connecting you with representatives who may or may not understand the specific issue you're calling about. Here's what concerns me most about this situation. It represents a broader pattern of complexity in government systems that disproportionately harms the least sophisticated participants. The tax code has metastasized into something incomprehensible to average citizens. When the IRS itself admits that most taxpayers need professional assistance to comply with tax law, and when government agencies can't even generate accurate reporting forms, the system has failed fundamentally. We've created a regulatory environment where staying compliant requires expertise most people can't afford and vigilance most people can't sustain. The costs of this failure fall heaviest on those least able to bear them. The immediate action required is straightforward even if the execution is tedious. Retrieve your SSA 1099 forms for the past 3 years. Compare the amounts shown against your actual received benefits by checking bank statements or payment records. If you find discrepancies, contact the Social Security Administration at the number provided in the IRS notice and request corrected forms. Once you receive corrected forms, determine whether you need to amend previously filed tax returns. If your income was overstated and you overpaid taxes, you're entitled to a refund, though you must claim it within 3 years of the original filing deadline. If your income was understated and you underpaid taxes, file the amended return immediately to minimize penalties and interest. Document everything obsessively. Keep copies of all correspondence with both the SSA and the IRS. Note the dates and times of phone calls, the names of representatives you spoke with, and summaries of what was discussed. If someone tells you they've corrected your records or issued a new form, get a confirmation number. Follow up in writing even after phone conversations. The bureaucratic machinery moves slowly and loses information regularly. Your written record becomes your protection when the system inevitably fails to do what it promised. This entire episode illustrates why financial literacy matters so profoundly in modern America. The systems that govern your economic life have grown so complex that ignorance carries devastating consequences. You cannot delegate responsibility for your financial affairs entirely to institutions, even government institutions, that should be trustworthy. The verification burden falls on you, the individual, regardless of whether that's fair or reasonable. The question isn't whether you should have to check the government's math. Obviously, you shouldn't. The question is whether you will, because the alternative is accepting whatever consequences flow from undetected errors.